Lesson 3, let's get into it. There's not much to cover on this one. It is just a quick one. I just want to cover a couple of trading terms that you're definitely going to be hearing as you learn to day trade, and basically stuff that just gets said in the day trading space. So this will just be a quick one, but I just want to cover over these 4 things that already I've said like 2 of them, I believe. So a couple of trading terms that we're definitely going to be hearing and that we're definitely going to be using. We're going to start here with the pip. So a pip is the smallest number that moves in a currency that we care about as traders. So what does that mean? Well, obviously when we are trading, we can see the price of the certain currency pair over here on the right. Now, there is of course a lot of numbers there. The only number that we care about is the pip, which is the 4th, let me just double check, the 4th decimal number. So, for example, let's write up our own number. Let's say price is currently trading at 1.2337 8. So let's say price is currently at this number, 1.23378. Obviously, we don't have to worry about the whole number as day traders because we're looking to capitalize on the smaller trades within the price and the currency. So how do we identify the pip? The pip is the 4th decimal place, not including that first number, of course. From this decimal, we count 1, 2, 3, 4, meaning that this number 7 is in fact our pip that we are caring about. So real quick, I just got to jump in here. The decimal point is the 4th when it's any pair except ones that end in JPY. You'll notice that a JPY pair has a much smaller number when it says the price point over on the right. So that is the 2nd decimal point. So anything but JPY. JPY pairs have the 2nd decimal point, and then any other pair is the 4th decimal point. Just a little note, I realized I forgot to say that. That number right there, the number 7, when we say that, for instance, price moved up 2 pips, that means, of course, this number is going to increase by 2 pips and become 1.22398. Why is that? Because the 4th decimal point, 1, 2, 3, 4, the 4th number in the decimal is the 9. That is the pip. That is the number that changes that we care about. So from 7, 2 pips increase goes to 9. We can easily see how far pips are increasing or decreasing with our price range tool. The price range tool, as we can see, if we put it on the side here, you have this little number here that says 17.8. That means 17.8 pips from this mark to this mark. So of course, if we add 2 pips, that would be all the way down here like that, and I would have to zoom in to make that exactly 2 pips, but you get the point, right? So 2 pips, that's how big 2 pips is. Obviously, it looks very, very small, but based on the lot size, which is the next thing that we have set, it will determine how much value is within that certain pip. So of course, on the other side, if we were to move down 2 pips, we would go to 1.23358, just like so. That goes down 2 pips from this current price point, and that goes up 2 pips from that current price point. So it's as simple as that. You don't really need to be doing the math as you're trading. It's definitely not necessary, but it is important to know what a pip is, and basically we all talk in pips as traders, so you'll be hearing that a lot more often. But as I was saying, the lot sizes determine how much value is within each pip. So there is different lot sizes. There is a standard lot, mini lot, micro lot, and nano lot. I literally had to reread my notes from when I was learning because I did not remember it, and you don't have to remember it either. But based on the lot size that you enter when entering a trade, say you enter with 10 lots, that will determine how much value is within a certain pip. So someone that enters 10 lots goes up 1 pip, let's say it goes up $100. Someone that enters 5 lots, that 1 pip will only be worth $50. So depending on how much you're risking, that's how much each pip is going to be worth based on your lot sizes. So that is just a position, the size of the position that you enter into your trade. And then when it comes to entering trades, I'm going to flip these around. Let's go long and short positions first. When it comes to entering trades, obviously I was explaining the short and long position tool, and as I said, I would have already said some of these before, but the long position tool basically it just describes a buy position, right? When we are taking buys, we call that a long. We are longing the market. And then when we are looking to take a sell position, that is called a short. We are looking to short the market. You probably would have heard of short squeeze, like short, stuff like that. You would have heard it for sure somewhere. But long and short, that is how, as traders, we describe a buy and a sell position. You can say either, it doesn't matter. As well, when it comes to entering either the long or the short position, we have what is known as spreads. Now, the spread is the difference between the bid price and the asking price of that certain currency. Basically, the bid and the ask price is the buying point and the selling point. If we take a look over here, you can see that there is a sell button and a buy button. Obviously, I'm not going to be buying and selling in the market right now, but you can also see that it has a price point. So for a buy, 1.23382 is where you'll be buying the market if you choose to go long. And then for a sell, 1.23370 is where the sell point will be. So obviously there is a difference between those two. That is of course where the broker makes their money. And this little number in the middle here, it's very small. I'll zoom in so you can see it. But this little number indicates the spread. So at the moment it says 1.0, 1.1. It changes all the time, right? Because spreads are always changing. But basically, if you see that price is sat here at our 1.23378 price and it confirms your entry, you're looking to enter into the market at that point, the spread is 1 pip. So that means that with this moving 1 pip higher, instead you've pressed buy at this price, but you get filled at this price. The fill is where you basically get entered into the market from your broker. So that is what the spread is. You don't need to calculate it, it'll do it for you, but it is always good to just take a look up here at this number, because sometimes it can be higher, like 2 pips or something, and then that will just mean that you're going to have to be prepared that you're going to adjust your lot sizes, adjust your risk, your stop loss, whatever it may be. You're going to have to adjust it, because you might see this number and think that you're buying there, but you might be buying a lot further up instead based on the spreads. So that is basically all the things that I had to go over in the trading terms. There is definitely a lot more trading terms out there. I just wanted to cover a few of the basic ones, a few of the ones that you're definitely going to be hearing a lot of as well. With that being said though, there is no homework for this lesson. I got nothing for you to do. So just go and watch the next lesson if you're ready. If not, take a break.